Okay, it's Sunday night and the market is just about to open and um okay, so it's a little I'm at a couple extra things this week. So I wanted to point out, let's see. Um okay, let me start from the beginning. So from the core trade, all I need to do now is set the 2 points at which I will put these on. I'll do that once the market opens. Same thing for these. Just fool around and set the 2 points at which I would put these on. Which that will be a little far. That'll be the farthest one up. And this one, I'm gonna pretty much want to get in right away, I think. But this one is new. This is a similar trade, but done with puts. It doesn't have so many longs. Like this one has, if you count them, it has 7 longs, and this only has 3. And it's way less susceptible to volatility. But the difference is that you have to already be in a short right at the close. So these other ones, you're not in the shorts yet because you're hoping the market's going to fall. Here you have to be in already because in case the market does fall. So this one, iron and the volatility proof, we're already in. So I'm going to see what happens, and then I'm going to go ahead. And I'm gonna go ahead and set everything up. Okay. Okay, the market is. Okay, the market gapped up already. So let me see. That means that. Or put, I want to get out. Oh God, sorry. Okay, I want to open this up, and there it is. Now I gotta set one in case it falls again, but give me a second on that. Here. Okay, so it's a loss, a little bit low loss there, and here, analyze opposite, and it's a loss there, and then now let me go back up to the bearish, and I pretty much want to get in one because case is running up. There's one there, so I'm going to lock that in. Okay. And then let's see if I were to get in this. Oh, let's see. So I'm going to make this 3,200. Let's try that. 3,200. 3210. Okay, I got 3210 for now. So this one is in at 3195, and I want to get in if it goes up to 3210. Okay, the market just opened 2 minutes ago, so that's going on for the bearish. This one, it's better if I put this on MES right now, right? Okay. Right, took a little bit of a hit already on that. So let's see. I want to analyze opposite. God damn it. Sorry. Analyze trade here. Uncheck this. I'm just looking to see at what level I want to put another one on. So there's one. If I do one there, obviously I don't have to do it yet because I'm going to do one there and. Okay. So this is new for me, so I'm just fooling around with this for a second. 31. Let me try 31.80 and 31.60. What happens? 31.80. 31.60. Yeah, that's plenty, right? So 31. That runs down. That's a lot. So that's more than I need. So 31. Let's see, 31.70 and 50. 31.70 and 31.50. Okay, so that's this for right now. This is 31.70 and 31.50. So if it doesn't go down 31.70 and 31.50, it's gonna stay up here. I'm gonna make money and that's it. If it does, I get whipsawed and just like everything else. Now this doesn't have. It has what, $124. So this is only get whipsawed a couple more times. But then I could, I'm just thinking I could just do another one of these or do something similar. I'm not necessarily done with this, so. But just let this play out. Okay. This, I am supposed to just look now and see what the... yeah, so I took a hit on this a little bit. Like, you see, because I took a loss of... Like what was that? Like $70? Well, here, I just... $75, right. Took a loss of $75, and now I have to make sure to the upside is 32.20. Still, yep, that's still the plan. And to the downside, 31.10. That's still the plan. So this nothing happens unless it hits 32.20 or 31.10 on this. So I'm just waiting. That was just protection for over the weekend. I've made the last few weeks. One time I think I made $200. One time I made $100 or something. This time it cost me $75. But this is just a wash. But just in case it had fallen, if it had fallen over the weekend, I'd be over here and I would have made money. That's all. And that way, you're not worried about it falling. So that's all that is. Volatility proof. Same thing. I was just in it because I was just in it in case it fell. Didn't fall. So now I took a little hit, not much, but I took a hit of $68 in this one. And now all I got to do is figure out about, so is 32.10 on the upside okay still? It is if it runs off. And on the bottom, 31.35. That's it's too low down there. So I'm going to make this. See, look at that pink line over here coming up. Do. Okay. Okay, let's see what the... Make sure I get these. It's 31. Right, the high. Woo. Okay. Just bouncing around for a second here. Okay, that's all. Everything's good. I think. Let me double check really fast. So I haven't. figured these out yet. Okay, let me do this really fast. So I was thinking that 3180 and 3120. That's more than enough. Look at all that. So I'm gonna go 3190, 3210. That's too close. Let me try. Hopefully I can go 3200 and 3230. But maybe I can't. Maybe it's already too far. 3230. That's probably too. Well, that's not bad. And look, I'm doing that for now, as of now, because if it happens in the first day, there's no collapse in the volatility of the earlier in the week, the lower, the closer this thing can be, because that pink line's it's gonna be like that if it happens tomorrow, and I'll be in plenty of money. It'll be great, and then I'll give me a little room. It still has to go up. This thing's fucking me up here. The real price. Let me put it on MES, because that doesn't. Yeah, see, it's only 10 points away. So let me even move it farther back, because again, like I'm saying, look if it runs up until tomorrow morning or whatever. This is you don't need to get in so early in the beginning of the week. This thing means more toward the end of the week, so I am trying not to get in quite as early, because if the market falls, you never had to do anything except take your money. So 3210 and 3230. Okay, I'll stick with that. That's 20 more points. Okay, the bullish is going to be farther out. So 3220 and 3240 I'm going to hope for. Let me try that. 3240. I don't really need to know these things yet. Here, let's see. Yeah, way more than I need. So 32. Again, let me do this. Sorry, I'm doing this all as I should have done this offline, right? Okay. Okay, so here's where I'm at. That's fine. So 32, 30 and 50. 32, 30. 32, 32, 50. Okay, I'm going to do that for now. That's the bullish one. Bearish one. Right, I'm already in one. I knew I had to get in one, and I knew I could decide in a little while what the other one is. So I think I said 3210, and I think I'm going to, yeah, I'm just going to stick with that. Okay. Let me put this on here too. See, I can even just not even put it on. I mean, look, but it's 32 cents pretty close, but I'll put it on. See, I do this thing where you fix it and then it doesn't distort it when you click on it. It's more accurate. It changes the y-axis based on this, and once you kind of get a view that's clear, it's better to fix the y-axis. It just makes it easier to see what's changed. Right. So again, that's right in the line. This thing is still in profit. There's really no area where if it ran up, you would lose anything. So, okay, so that's 32.10. All right, so I'm already in that one, and now I'm going to get out of this if it goes back down to 31.81 after that. All right, so this one I am not in any of them right now. I took a loss of $65 over the weekend as my protection, and now it has to go down to 31.70 for me to get in, and then down to 31.50. And again, if it ran off, I would just get out. And if it doesn't, if it stays above that, then I'll just make money up here. And again, I might add to this depending If I'm getting up here and I have no profit at all, because right now I'm only 134 bucks. I mean, only, but if that happens, then I'll you know, I'll move. Sorry, I got distracted. If that happens, I will. I potentially will prop this up, or just double up in this trade because it'll go higher up, and that means this will be worth even. Or well, I don't know. I can get into more of these, like maybe shift them up and do it again, something like that. You know, there's a lot of things you could do. So, okay. So let me. The iron one, I already did, right? So I think I did everything except I want to do the flat delta. I'm going to put on the trade now. I haven't put that. Oh, no, I did this at that close. Yeah. I got to show you that one. Okay, so sorry. Back at the beginning. It's a lot to work out in the very opening. So that's clear, right? Don't have to do anything until it hits 32.10. Right. We're not in them right now. It's like this. Don't have to do anything until it hits 32.10. So right now, you can see, unless it hits 32.10, unless it hits that, and we are right at the moment, we're right, but I just do it when the market opened. It opened right here on Sunday night. Okay, so unless it hits that, that's, and I'll go label them later, but that is the core, right here is 32.30, so that's the bullish. So that's above that. So that's up here. I don't have to even worry about that for a minute. I'm gonna have to, obviously I'll have to deal with the core before I deal with the bullish. So that's up here. So I can just not think about that for a minute. The bearish, that is 32.10 also. So at 32, did I say? Yeah, at 30, right? So two things will get triggered at 32.10. The second bearish one, and the first core. So when I talk about these, at least for the time being, this is the core MES1, core MES2. This is, bull MES1, bull MES2, bear MES1, bear MES2. So core has none on, and it's going to get in at 32.10. Bullish has none on, and we'll get in at 32.30. Bearish, I was hoping to get in lower, because if the market had fallen, then you get in lower and then it comes up, and it's even, you even make more money, or it's easier or whatever. But anyway, I got in at 31.91, and now I'm gonna get in a second one at 32.10, or I'm gonna get out at 31.81. Or actually, just make it 31.80. Just, it's better doing the evens. It's easier to keep track of. So I'll get out at 31.80 down here. It's where I'll exit the bearish one. I'm going to put these on little separate charts that are next to it, so it'll be easy to see. But anyway, I'll do that a little bit later, but for the next video. But anyway, just to make it clear what's going on. So that was bearish. Okay, the core puts, instead of not being in any over the weekend and saying if the market falls you're in good shape, and then you get in one or two or whatever when the market opens, the core puts you have to be in one when the market right before the market closes in case it falls. So you got to be in one like this. So that was the close of the, and now you're saying I'm going to get in, and then if If it was really, really falling, you would just stay in it, get in a second one, make your money, and then get out that night or whatever. Or you do this, or you have to get out if the market's going the wrong way, which you did. So I got out, and now we'll never get in another one unless the market falls to 31.70 or 31.50. So, it's doing the opposite of the other ones, but there's a big overlap, and they all should theoretically make money, but we'll see. Iron, again, you don't have to get in at any time unless you go near the edge, except I want to be crash proof over the weekend, so I put this one on. Now I'm just doing these two up here. I'm not using these. This is just to let you know where I'm gonna get in if I do it. It's under this black line is the actual trades. So I put that one on Friday night, and then market open, I got out, so I'm here. And now if it goes up to 32.20, so that's above this, so I'll make that note up here in a minute. That's what's going on with that. So 32.20 as we showed. Okay, if it runs off the edge there, I think I want to do that, right? Yeah, like this. So 32.20, you can see, and 31.10. Right. Okay. So I could make that, 31.20. Probably will. Here, let me do that. Okay. All right. But so again, I'll make my little notes in my chart. Volatility proof. Again, I didn't over the weekend. I didn't have to do it, but it was here. I just put this one on in case it fell. Oh, sorry. This one on in case it fell. And then I got out. And now I'm just debating again. These are just to help me figure out which ones I will do. Oh, note that on the iron, the adjustments are 2 contracts, but the protection over the weekend is just 1. So the adjustments are 2, protection over the weekend is 1. So all I got to do here is these are just my theoretical adjustments. This is the one that I took, and I took a little bit of loss for protection. So now I'm 31.54 is on the low side, shows. So actually I'll make it 31.55, an even number, make it simple. And then here on the upside it's 32.10. I might adjust that a little tiny bit, but that's fine. And if it doesn't happen by tonight or by tomorrow, I think these numbers can go farther out because you're in some profit, and this whole thing will go up. I'm pretty sure. Let's see, if it was right here, if it was here tomorrow, and then I check, that's 2 days ago from now. If it hasn't triggered any of those, look, you click on that and it goes on that one, maybe not on that one, on this side though. Yeah. So all I'm saying is you might be able to adjust these down a little bit if it doesn't happen soon. Okay, but there's plenty of profit up here for whipsawing. Ryan's trade. Randy lost $50 last week. I put that up here. So we're getting started again. I'm gonna get a trade from him tomorrow just to see what happens, and we'll start lining those up too. My put spread, I'll check on what it is, as I don't even have it open. It doesn't matter. I mean, actually, it's a little bit of profit here. Let me just. This is a silly thing, but I didn't put it in the. I'll put it in the. I'll put it in Thinkorswim on the chart, so we can just look at it later. But I don't even know how to look at this. I don't even know how to look at this, but. It should be updated. Ooh, I'm $30 up. Okay, so there you go. Oh yeah, that makes sense because the market went up. So, okay, so I just had $5,000 even in this account. The only trade I have on is this, and it all makes sense. So it's not going to be, again, I'm not going to get in until that $10 trade. Let's see, where is it? It's I don't know anything about this position. Okay. Oh yeah. So so that's 10.25. So I want this my first time to be around $5. So when this is around $5, I want to get in. So anyway, I'll put that on a Thinkorswim risk profile so we can see it later. But anyway, that's trade's fine. That's my put spread. That's that. Okay, so my flat delta. This one I put on before the market closed. I really like this trade. So, right, you can see that the market closed. The trade closed at on Friday at 31.7950, which is see, it says 31.7975. Well, it closed 75, but if I was to get in. If I was going to short something right at the moment, it would have been 31.7950. If I was going to go long, it would have been 31.80. But a little earlier, I was playing around, and I got into a flat delta, and so it was 31.78. As you can see, it was just a little earlier. Whenever that was, it's hardly any earlier, but around this area, 31.78. A couple minutes before, a few minutes before, 20 minutes before the close or whatever, I put the flat delta on because I like this trade, and this trade just makes money like watching paint dry. So I'm going to start doing this a lot. I did it a couple of times and made profit, but just haven't really kept it in a dedicated account. I just fooled around with it. So this trade, I mean, really, I think I only want to make $100 ambitiously. $100 per contract for now, and then I'll start maybe changing that. So this is 981. I'm already at $73, but I have to be able to get out. So I'm gonna wait till it's like $150 or something like that, and then see what the if I can, I'll get out. This was market in. These are both market in, so I'm going to see about market out right now. It's like if I try to get out with the market right now, usually it's more expensive on the way out. So especially in the beginning. So watch. If I hit create opposite order right now, want to get out. Look, the spread's ridiculous. It's all well, I don't know, 75 cents. So here, let me just do it. Let me just show you. The slippage is pretty big on these. Not crazy big, but like you probably got to go $75 more than you want to get out of these trades. So they're expensive in slippage, but they're really cheap in margin and really safe. So let me show you that. Uncheck this and uncheck this. This is okay. So now it makes sense, right? You lost some money on this, you made some money on this. The delta's pretty damn flat. So now when I check these, though, this is going to come down to into the negative for right now because of the slippage. But right, so it's like $100 almost. But that's just because it's the market just open. It'll be more like 40 or something like that during the day. So I just gotta get this up to like 150-ish to get out at 100. But look, the margin is 971, and there's nowhere the market can go really. As this goes up and up and up, look, that's 7 days from now. If it goes way up here in 7 days, you're going to be in profit. In 7 days, you're down here, you're going to be in profit. Where's it going to go? You almost don't have to do anything. Like, you can pretty much ride this out to 33.15. If it goes that far up, that's when you would roll it out. And on this side, it's pretty much like that too. If it goes that much farther down, the reason you have to roll it out down here is because you'll have expended a lot of the credit in here, and you just need to bring in new credit. So you're gonna have to roll it up or roll it down if it goes way over here. Roll this one up or roll this one down. You don't have to do anything with this until you make the money. That's it. It's really simple, and it doesn't take very long. So look, you're trying to make this. So you're saying basically, within maybe 10 days or 15 days. if it doesn't go way up here or way down here, you're just out. You're out. Also, the other thing I should mention about this trade is that there was something really simple about it, something good about it. Oh yeah. Sometimes you get into the trade. If you get into this trade, the market falls, and then you get into this trade. And this is always available no matter what, because all you're doing is you're setting up this. I'm sorry. Let me make sure I'm explaining it. This top red one is the trade that I'm in. This top green one is the trade that I'm in. The bottom is just showing the open position. So the open position, but yeah, I'm not just in case you were going to exit, so you can tell. That's all. That's all. I just do it like that. So you're in this red one and you're in that green one, but these are the checked ones. But the bottom are just open to demonstrate. So this has, you can uncheck this for a second. You're up $80 on the MES, and you're down. Sorry, let me try it again. Woo! You are up $81 on the MES, and you're down $23 on the spread, and that's true, except that on the vertical spread, and that's true. But when you click on, like I said, the bid ask spread is kind of big, so it's hard to get that right now. I mean, you could theoretically get it, but just no, I'm not interested in that. So I just make sure that I get plenty of money. And what's good about this is there's no slippage on this, so you can always exit. You can exit without fear. What you do is you basically just say, oh well, for me to make money, like if you were to click on this and say, get me out. Sorry, click on this and say, get me out. Like, well, you're going to make money at $17, but you're not going to make money at $18.25. So you put in the order at $17, and then you say, if this fills at $17, get this one out at market, because this only flips a quarter no matter what time it is. So you make your money minus $1.25. So it's a really easy way to have an automatic exit where you make your money. And this is really cheap. So it's the last thing I was going to say is, when the market moves down and you get into this, and this is available anytime, because the reason all you're doing is you're saying this is a 10-point difference in the spread. I mean, thereabout. So it's 33.15, 33.90, 33.15, 33.90, right? In August week 2. August week 2, 33.50, 33.90. 33.50, 33.90. Okay, 33.50. Delta is 20. 33.90. Right, 33. Sorry, let me make sure. Oh, 33.15. Sorry, 33.15. Delta is 27. 33.90. Delta's 14. Right. Why am I spacing out here? It's supposed to be a difference of. Oh, it's 5. It's 5. Right. It's 5. So 33.15, 27 is a delta, and 33.90 is 14. That's set. Right, okay. That's 7 because this is 1. Right, because that's almost 1, right, because it's moved a little bit. Yeah. So you're making it 5. So all you do is you basically make that 5, and then when you put it on, and so that you get around, you got to get something respectable, $10, $12, $14. So you make this negative 5, and then when you put this on, that's positive 5, Right. So when you put this on, it's negative. That's what it is. You put it on, it's -5. Right now, it's -5.5. But you put it on, so the difference between those two is -5. And you put this on, and you can do that anytime. But all I was trying to say is, hey, if you do that, and the market has just fallen, when it runs up, you're gonna volatility will drop out of these even a bit more, and you'll make your money in 3 or 4 days instead of 2 weeks. Happens like a third of the time. So sorry for all the blah blah blah, but I'm just getting my shit together here. Okay, so, and you don't have to keep watching this. I mean, I'm just doing it for myself as well. So okay, so I'm ready. 32.10. It's 31. It's 15 points away. This is even hot, and this is even higher. That's even higher. Nothing to do there. This one, it has to back up to 31.81, or I'm staying in, or gonna get in higher at 32.10. Also, here core puts, it's gonna have to go down to 31.70, or I don't do anything. This, it has to go up to 32.20 or down to 31.20. That has to go up to 31.55 or down to 32.10. This one I am waiting for Randy. Give me his trade tomorrow. Here is my flat delta, which is doing really well. I put this on right before the weekend, and it makes sense because you're like, the theta is like around that, and times 3 over the weekend. So times 3 is almost like, it did a little better because the volatility dropped a little bit because the market went up a little bit, but that's basically why it's that. So it's like it's around 3 times this plus that drop in volatility. So that's why it's this right now. Okay, that's everything except I am doing this other one. I'm playing with it. I haven't put it on yet. This is my my TR, my runner. So I'm not really. I wasn't gonna put this on officially yet. I'm gonna do it. It's this trade. Do I even right here? I haven't started it yet. So, but I mean, I can show you, but I'm just fooling around that I haven't put. I used to do this trade. So let me see. The market's gone up, so that would mean. Let's see. That point is 32.05. So if I move that up to 15, if I move these both up, let's see, 15 and 25. So 15 and 25. Oh no, it's the wrong way. So I had 32.05. It's 31.95. So let's go down 20 and 32.05. Wait, that's all wrong. What the hell am I doing here? Let me just start from scratch. I want July week 4. Okay, so week 4. So let's see. Price right now is, so if I go 32.50-ish. And then I want this to be about $12 or something. I mean, yeah, $12-ish. So 3,300. Okay, so let's see. Okay, that's good enough. $10 is fine. So that's that for the for here. And if I do it on the put side, I'll just create duplicate order. God damn it. Analyze duplicate order. And put it on the put side. Uncheck that. And this is going to be 31.50. And then 3,100. Okay, and then the delta is 30, 90, 30, 90. Delta looks pretty good. And okay, so this is the trade. Now I'm gonna have some slippage. Now if I did this in the morning, it'd probably be a smarter idea. Because if I look at the slippage right now, look, it's oh no, that's good. So look, 10.05. I definitely would get $10 here. That's for sure. It would get oh there you go. So 10.15 is the lowest they're gonna give me. But I just know from experience it doesn't work that way. It'll reject the order. It will give you 10.25. It does it on the quarters. And here, analyze a quick trade here. Well, it's not going to be that. I would not get. I've done it so many times that you would get 11, but I'm going to pay. I'm going to put 10.75 because you would definitely get 11. So this is 10.75. There's no reason to be that stupid about it. I do it all the time. I have years of experience with this. So okay, so 10.75, fine. So these are realistic fills. Okay, so what you do now? Actually, let me go like this. Analyze opposite trade, and then analyze trade. Delete that and analyze opposite trade. So again, the green ones are the ones that are you're just seeing how they're doing. So that's already the slippage. Okay, so what am I doing? This is my so-called theta runner, which it's been a very good trade for me. So you go down to I think this works in any conditions. It's just the nature of the way it works. So when you don't care about where it moves, really, all you're doing is looking at these numbers. When one of them is about $7, $3 in profit, you put a second one on, and then the earlier one becomes break even. It has a break even stop. So, like for example, if this was like if the market was falling, and this was down to $7, you put another one of these on, and you see what happens, and it goes. And then if another one happens and it keeps running, you have a third on, and you just get out. You're being lots of profit, and you get out. And the beauty of it is, if it falls backward, you didn't lose anything because you broke even on the other one, and they can both be making money for you. So I'm gonna. I guess I'll move this over to the other thing. The reason I was not hesitating about putting it on is because I wanted to play around with just how my expirations, how far out I wanted to go and stuff like that. I used to do it much farther out, and expiration had these really, really crazy far out. But I'm trying to be. I know that works. I know it works if you go like, say this is Monday week 4. Sorry, July 20th. Wow, what is that? That's July. I know this is the expiration's only on the 20th. Right. It's only 8 days away. I never do it this close. I used to do it 100, 80, 90, like 60 at the minimum, way out here, because it's a really easy trade. But I'm trying to plan the idea of making money more quickly on this. So that's why. So the thing is, I think it's possible I would have to roll these out, and I don't have all that figured out exactly on the nearer one. On the farther one out, it's really easy, but you make money. It's more safe. It's less capital. You make money more slowly, but I'm trying to play with this. So I'll move this over to the other. I'll move this over to where it's underneath all these trades. For later. So I'm getting it all set up. So I think that's everything. I know this was long. Sorry.